Afternoon, ladies and gents. Simon Brown here, doing this afternoon's presentation on multiple trading systems. I'll go through the details as to how we got to this point in a moment. We're looking at probably about 20 minutes or so. We've certainly got time for questions. So if you've got questions, put them in the Q&A. I'll get to them. If they're specific to that point, I'll take them immediately. Otherwise, I'll take them at the end of the session. And the point of today, talking around index trading, in particular, we're talking around index futures. Just a quick recap on that. The index futures, of which there are two. There is Aussie futures and AUMI futures. Both have the same underlying, which is the top 40 index. Aussie at 10 Rand a point, AUMI at 1 Rand a point. So if your position makes 200 points, you've made either 2,000 or 200, depending whether you were Aussie or AUMI. And of course, if you lost 200 points, you're down 2,000 or 200. You can go long or short. To go short, you just sell what you don't own. You have a negative position and you profit from that. And of course, to go long, you buy what you don't own and you have a positive position. Trading hours, 8:30 to 5:30. Always opens half an hour before the equity market, closes half an hour after the equity market. You are trading in a futures account. You need to enable a futures account on the standard online share trading platform. And being a futures product, a margin is required. That margin's currently around 4,500 for the AUMI, 45,000 for the Aussie. So obviously you're getting gearing. In truth, what we care about when we trade in these products are those rands per point. So what we've done over the course of this year is I've gone through my three trading systems, the engulfing, the gap, and the 721, which is my primary. Three trading systems, all to trade the same product, namely Aussie or AUMI. And the trick then is, well, how do you manage three systems in one go? Particularly, you might already be long and you get more long signals, or what happens if you're long and you get short signals, et cetera, et cetera. So that's what we're going to look at today. Not too fast. Just a quick recap of the systems. My 721 is the primary system I trade with. It is charting the top 40. So I chart top 40 with the 7 and 21 moving average. I can trade Aussie or AUMI. Gives me long and short trades. Typical trade, 10 bars. That has extended itself. I'll come to that in a moment. And obviously, longs for move higher, shorts for move lower. So the video is down. The link is there if you want to go and find the video. I don't want to go through the entire system again. But essentially, charting the top 40, I use an hourly chart. You can use any time frame you want. When I did the video, someone was asking about daily and running the numbers on it. It's been a rough if you've been trading it daily. And that's because our market is pretty much sideways for the last 3 years. We're green year to date. In fact, earlier today, we were at the all-time high, well, the high for the year for 2017, but it's broadly been a sideways market, and that's tough for a system like this. It is a trending system. I trade in the 1 hour, and that's a choice. It fits with what I'm trying to do and how I trade and other issues and other things I have to do. So I'm using the 1 hour chart for trading it. When the 7 moving average crosses up through the 21, and I use simple moving averages, that triggers a buy. The next candle is green, or the next green candle, it might not be the immediate one next, that confirms, and then I would enter the position. Stop, I'm using daily ATR, average true range, on the top 40. I'd initially been testing it with hourly. Hourly works, but it's too short and you get shaken out and you miss some of the bigger moves. That big move short from end of May into June, it ran for about 2, maybe 3 weeks. I was by that point on the daily ATR, and if I hadn't been, I would have got shaken out a couple, and then you're out of the trade and you don't get a new entry signal. So then what do you do? So I've expanded to a daily ATR. It means my stops are closer to, I was using twice hourly, which was probably averaging around 250 to maybe 300, 360 at most. A daily is around 480 to around 520 points for that stop. So that, because I'm using different stop, it means my typical trade is more than 10 bars. I can certainly get into trades that are running 15, 20, 30, 40. And in fact, I ran a trade the while ago that ran for about 11 or 12 days, 10 bars a day. You run the math, that's 100 odd bars. So this is now my primary system. My two secondary systems is my gap trading. Again, there's the URL down there. basically looking for that difference between the mark-to-market and the open. And if it closes, and the terminology for how I'm determining if it is, etc., I want to be in that close. So often you'll see a market close today, and then tomorrow opens up maybe 300-400 points, and then comes back and ultimately trades flat for the day. And you want to grab that gap close. Secondary system, as I said, there's the link to the video explaining it. And then my other one's an engulfing candle, which is a reversal pattern. So mostly I'm trading trends. My 721 is a trend-based system. My engulfing candle, the gap close is kind of, I suppose, a contrarian system in a sense. Engulfing candle, very much a trend, trying to catch that trend. So when you get at the tops at the bottoms, and this obviously in the hourly charts, but in truth you can catch it during those trends as well. Maybe a strong uptrend, bit of a reversal, and then it carries on again. And it is just, it's a classic chart pattern. The video link is down there. If you go have a look at that, you'll find it. You can go read through that. Again, I'm using hourly because it fits. I find it very successful with a 15-minute chart. Trick just for me, 15 minutes doesn't fit. It doesn't fit what I'm trying to do. So what I have now is 3 trading systems, all sitting in the hourly. And what happens is that you're long on one, and I'll give you an example, and then it kicks you in and it wants to put you short of another. So suddenly you're long in one system and you're short in another system. In other words, you're net flat the market. You're long, I don't know, 135, however many contracts. You're short 135, however many contracts on the other side. And the net impact is that you're, +3, -3, you are 0 contracts. No one's making money except the broker. Now, I know a lot of folks will say, but yes, and then you lift the losing trade, etc. Yeah, sure, I hear you, but no. Firstly, mechanical system, it's going to kick me out when it kicks me out. As soon as I'm into these trades, I put the stops in, I put the exits in if I've got exit strategies, which I do on my gap trading system. As soon as that gap's closed, I take the money and run. So my exits are on point. And I remember back in the day, I'd often get asked the question, why not take a long in a position and an equal short in the position, and whichever one runs, close the other one? Well, yes, but why? Why not just wait for the run and then enter that position? If the run is higher, then go long, and if the run is lower, then go short. And the thing is that you want to take the long and the short, because then, at least I'm in, and all I've got to do is close a trade. But are you better skilled at closing a trade than you are at opening a trade? And the answer is probably not. And you're as likely to err on it. You're as likely to get false runs, etc., etc. So my problem when I'm with these multiple systems is, how do I manage that process of sometimes I'm going to be short one, long the other, and it just gets messy, and I don't want to be in that position. I want to be, I'm either in the market and I have exposure, long or short, or I'm out the market and I'm sitting in cash and there's no problem whatsoever. So what I do is I trade my primary system, and if I'm in my primary system, I ignore all other systems. If I'm not in a primary system trade, then I focus on my secondary system. So, for example, Aussie futures at this point in time, midday on Tuesday, Tuesday 25th, I am long the Aussie. I got a signal sometime yesterday. I'll show you the live charts in a moment. And then yesterday afternoon, we got a engulfing candle. There it is there on the chart. That's the hourly. Now, I think it wouldn't have been a profitable trade, but at this point here, you're unaware whether it's going to be profitable or not in that candle close. You just know you've got the engulfing. So my trick is I ignore it. I absolutely ignore it, because my primary system takes precedent. So what you've got to do is decide, of the systems that you trade, which is going to be your primary, which is going to be the one that when you're in that, you ignore everything else. If I'm in a gap close or an engulfing trade and my primary system triggers, I will exit the gap or the engulfing and I will enter the primary. In other words, there's a system that rules supreme. And only when it is doing nothing do I then go into other trades. And do I then take other positions using my other systems? Now, this worked fairly well when I was using the shorter stop loss, because I was getting kicked out a whole bunch more often. And it was making money, just it makes it keeps you in a good trend for longer when you with the bigger stop loss, and that obviously makes sense. But when I was doing that, as I said, my average trade was 10 bars maybe, which is hourly bars, so it's a day and a bit, and then it would be 2-3 days before I got another signal, and in that meantime I would trade the gaps and the engulfing candles. But now with that longer stop, what I'm finding is that I'm in the trades for longer, so there's less time that I'm not in the market. And what that means, I'm getting fewer secondary trades that I'm able to manage. Now, I got a bunch of options here. One, carry on as I'm doing, be happy with the situation and leave it as it is. Two, I could change my process of doing it. Don't like that. Or three, I could move to trading other products as well. So I'm doing bits on the first and the third. In other words, so I'm getting less gaps and less engulfing candle trades that I take because I'm in the primary system so much more, and therefore the others are being ignored. So I ignore them. I don't worry about them. It does mean I take less positions there. I was chatting with a couple of folks, and they're like, well, why don't you have two separate accounts? But it still comes back to, so yesterday I would have been both short and long, and there is always a chance that what happens is that you get shaken out of your short for a loss, and then you get shaken out of your long for a loss, and now you've incurred two losses. There's also a chance that you make a profit on both, particularly because the engulfing and the gap trades are typically going to be much shorter trades. I'm going to get out much quicker. I'm taking much smaller profit. So I could, whilst losing money on the primary, say, hey, or at least I made some of it back on my secondary system. But again, I'm net flat the market. I could trade smaller positions in the secondary system so that I'm not net out. In other words, so let's take yesterday, let's say I'm long 6 contracts, but when I get the short on the secondary engulfing candle, I only trade 3 contracts. So I've still got a net long, but I've basically reduced the position size. And I've looked at that, and yes, that's actually not a bad shot. That's not a bad idea. And again, trade them in different accounts potentially, which is easy enough so it doesn't get too messy. But I'm holding too much cash in terms of margins and etc. So I suppose in a sense there's probably no perfect answer. They're all going to be a little bit messy. I'm just very adverse to having two equal but opposite. The other risk is that I will trade up to a position size, and the max I will do is 9 Aussie. What I don't then want is a situation where I've got a trade on and then I get a secondary trade and it's also long, and suddenly I'm up at 12, 15 Aussies and way beyond what I consider my risk threshold. So keep it simple, and I say, I'm going to stick with what I'm doing. It means less engulfing. It means less of the gap closes as well. But the primary system's working. It's making good money. So I'm happy with it. So that's what I end up doing. I only enter that secondary if not in a primary. It does mean less secondary trades. As I said, I've dropped the stop loss to daily ATR rather than hourly ATR. I'm running it through to the end of the year. We'll see how it works. Certainly, it seems to be a bit better. We don't have a very strongly trending market. On the hourly chart, we sure are getting some trends. And we can go over a look at that. So there is the hourly chart. That's the Aussie. So yeah, we're getting some trends. Nice trend up there, etc. Got kicked out, got back, and getting a bit messy at this point here. To be expected. That's pretty much up at strong resistance up there. But if we go back to a situation where it's almost one-way traffic, and I'm thinking, 2007 on the upside, 2008 and beginning of 9 on the downside. You start getting that one-way traffic, it's a whole different story. And then you get into trades and they just run and they just print money. Question coming through, asking about those 2 candles there. Yeah, so I'm not a candle expert. They both could be kangaroo tails. There could be many things. They look messy. I'm going to trade. My stop loss is positioned, and I leave that trade to run until such time as my stop is triggered. I'm unconcerned. On the right-hand side here is my top 40, because remember I chart that for my entries. So I had been long, got stopped, and now I'm long again. I think I entered on that red candle there for my trade. So I'm long from that point there. So I'm in the profit. I think my stop is at around about my entry point. What I've then done to get more trades, because you know, if you've got a system that works and you've got some time and like, you want to add some trades to it, and that's why I bought in the secondary systems, and then ran into some issues in terms of changing the stop loss. So what I then do is say, well, what else could I trade that will give me, you know, similar? So there are options. Of course, there's other indices. We could use Web Trader. We could go trade the DAX. We could trade FTSE. Problem with FTSE, actually, it used to be very similar to our market because of all of our big stocks trading on the FTSE. But now that Naspers isn't there, Richmond isn't there, MTN isn't there, you know, it used to be Anglo, Billiton, Old Mutual, you know, those dual listed, SAB Miller. We used to have a heavy weighting of our dual listeds in Joburg and London, which meant a lot of similar tracking. That has fallen away. So certainly we could go take the 721, we could use Web Trader, and we could go and trade FTSE 100 and or DAX. And that's a very good way of solving it. And that is partly what I'm looking to move towards, is to start trading multiple indices. And I don't look at America or the Asian or Australian indices time zones. Yeah, I'm not interested in having to be checking markets at you know, 7, 8, 10 o'clock at night to see if I'm getting trades coming through. So DAX and FTSE work nicely. I've got to see how correlated they are. My eyeball testing so far is that they're not, and certainly they're worth trading as independent from the Aussie. So that then gives me 3 indices that I can trade. What I'm currently doing is Aussie, and then I'm trading Euro USD or you know, USD Euro on the FX. Again, you can do that within the Web Trader environment. And what I'm looking, I do the same process here exactly. A couple of key differences. The one is I use a 4-hour chart when trading currencies. I just always have. I've never, well, that's not true. Early 2000s, I tried my hand at currencies and I did it in the shorter time frames. But I like the 4-hour chart. It does give you a midnight and a 4 a.m. entries. The midnight entry, in truth, is seldom nothing is happening. And if you miss it, you grab it in the morning. Ditto with the 4 a.m. You know, that's really just some trade happening through Asia. That's, you know, a bit of Japan, Hong Kong, that sort of thing. So you will miss the occasional, but then you catch it when you get up, as long as it's still in play. And yes, you don't get the perfect entries. And then my stops, no problem. I program them into the system. I'm using a 2 ATL stop on a 4-hour chart. I haven't. It's working. It's been the Euro USD has been an excellent trading product lately. It's given really good returns, largely I suspect because you know, there's been a really strong trend there, which makes it quite easy to do. And this then solves that problem of the conflicting trades. So one trading system. But what you also find is like the FTSE's been running pretty much since Brexit. So we've had a year of FTSE running. DAX had been doing well. The euro dollar's been moving strongly, initially down and then now moving higher. So you'll get markets such as Aussie, which is kind of range bound within the 1-hour chart. There's some activity, but certainly if you step back to longer time frames, we've been going sideways now for over 3 years. But other markets are running. So the Aussies may be struggling to make some money, but then your others are making money. So I'm still going to do those secondaries on my Aussie. It's just that they happen less frequently. So I'm more focused on looking to other products to trade. And those other products will be DAX, maybe FTSE, and then the Euro USD, which is working smartly and solve the problem that way. The risk, of course, is all your skin is now in one trading system. And that always carries, you know, if the trading system is broken, you've got problems. And I traded the system back 506, did perfectly well then. It's working at this point, even in a tough market. It had a very good 6-month kickoff to 2017. It's had a all right Q3 for 2017. Q1 was good. Q2 was really good. And Q3's been okay. I think we're ahead, but it's just okay. It's nothing absolutely killer. But by moving into those different markets, I have no conflicting trades. And as I said, the FTSE is not as much as it used to be. Perfect trade, we always touch on that, always critically important. So, I mean, the point is, and this comes to the process more than anything else, is pick your time frames. Keep it simple, pick your time frames. Be disciplined. And that's what the perfect trade is about. I mentioned a moment ago that your risk is that perhaps the system is faulty, and that's always a risk. I mean, make no bones, the system might be faulty. You might put together a system that ultimately loses money. I speak about in the 721 video, the links were up earlier, around how we can manage that process, around how we can use Mark Douglas's theory to test the system and to build confidence in the system. I don't do back testing. I don't program back testing and the like. I worry about my errors in my programming. More than that, I worry about there's too much scope for not perfect. Where did you enter in the back test? What was the spread? All of those type of issues. You're typically going to enter at the closing of the candle. And it's nice, but there was a spread. What was the spread? How big was it? That's going to hurt results and the like. But the biggest issue and the biggest problem you're going to have with your trading is you. And it's about consistency. It's about discipline. My 721, I traded pretty much exactly the same way every single time. I made an adaptation, and it was a big deal for me to change something mid-year. I usually change half-year, but I did say to myself earlier in the year when I started it, when I kicked it off and I went through the process of testing it and everything over the Christmas holidays, I said, I will, particularly in the stop loss side, I will have a look-see and perhaps adjust it if need be, but I've got to give it at least, a quarter to run. I've got to give it at least a bunch of trades to really see if it's working, and then made the call to make that change, which is now in place until the end of the year. And then if need be, we'll adjust at the end of the year. So it really is about that consistency. It's about the discipline. It's about not pulling trade. It's, I'm long, and there's a lot of overhead resistance coming, etc. And that, a lot of folks, when I go long, say to me, "Oh, but what about?" And I'm like, the system said long. As soon as we start saying what about and trying to second guess, we're going to cause ourselves some pain. We're going to cause some trouble. On the primary system, I'm charting the top 40. And I will do the same on the DAX and the FTSE, and that's part of my problem. A lot of them are giving me, a lot of the platforms give synthetic. In other words, they're giving you the futures. I actually want to see the underlying chart. Why am I fixated on the underlying chart? It's less volatile. If someone goes and puts 20 contracts through the Aussie, if it's a quiet period in the Aussie, you will move it. And 20 contracts is only, 700K margin. It's a lot of underlying exposure, but you can move that Aussie on what's a relatively small position. You would need 10, 100, 500 times the amount of capital to move the top 40. So what you will see, and if we go here, you can see it. We're looking at about the same time frames here. There's, those volatility spikes up there are bigger than what we see here. We've had a much bigger sell down on the Aussie on this hourly candle than that one there. You're going to get a lot more coming through. There again, the Aussie in the 4 o'clock from Friday, a lot more selling pressure before the rally into the close, compared to what we saw here, where we had very little selling pressure into that. So a lot less volatile. And the reason I don't want the volatility on my entries is that it's going to give me less good entries. So I stay away from that. So look at how you manage those multiple systems, and then look at other underlyings that you can trade. And WebTrader's got, indices galore, it's got FX galore, etc. So we can look at the others. We can take a working system and move it across. The one place where my 721, and I haven't tested it on it in years, but when I say years, I mean like more than a decade, is on equities. I haven't traded shares in a decade. I don't trade them, partly because they're too volatile. And these systems are, 721 is designed as a trend-based system. It needs nice, smooth trends. It doesn't like the volatility that you see in shares. So it's not giving that level of profitability that we see in shares. Ladies and gents, that's it. Slightly over my expected time, but that's not a problem. If you've got some questions, we can certainly take questions. First question through from Susan asking about the 721. What type of moving average? Susan, I use simple. In my lazy system, I'd always used exponential, but in this case, I use Simple here. And that's, from the testing, but way back in the day. This was a system that was designed around about 2003, maybe four. We really focused on, and we ran through, and we came up with a couple of pieces of information. 721 were the best series of moving averages. Simple was the best to use, and 15-minute was the best time frame. Now, I don't know that those necessarily still stand true. Even if they did, the 15-minute time frame is not attractive to me. I don't want to be a dedicated day trader staring at my screen all the time. So whilst it might, in theory, work, in practice, I'm not terribly excited about it. Yeah, so with currencies, a question, Simpiwe, the question around trading FX. Sure, so don't trade the big ones, trade the minis. In other words, trade a mini contract rather than a large contract. A mini is what, 10,000, the large is 100,000. So it massively reduces your risk and therefore massively reduces your margin amount. You can trade a mini currency contract with about $2,000 per contract you trade. Or you can trade with probably 10,000 ideal. You could drop that to 7 or 8,000. Aussie, therefore, you need 100, or you could drop it to 70 or 80,000. What am I targeting? So short answer, in Aussie, I'm targeting my aim is to make 10,000 points a year. I don't think I'm going to do it this year in the Aussie, and I'm going to probably have a similar-ish aim. Although in truth, if I move across to, the DAX and the FTSE, which are, DAX is around 10, 11,000, FTSE's around 7,500, you're unlikely to make. So what you then do is you say, well, can I make 10% of the index per year, or you can focus on the move. I aim at 10,000 points. And I'm not likely to achieve unless I have a stonking rest of the year. Jacko, 721 are the moving averages that I use. I call the system 721. It's the 7 crosses the 21, gives my triggers for longs and shorts. Someone wants to go back to the video links. So there's the video. If you just go download, if you can't grade, just quickly screenshot. Also, if you log on to online share trading, under special announcements, webinar downloads, you'll find all 3 of these trading systems, and you can go find them there. So 721 is just the moving averages. Why Euro USD? Because it's probably the biggest pair in the currency FX pair in the world. I could probably also trade pound, but or yen. The key thing is I only am interested in trading the majors. I wouldn't trade anything else. The majors are dollar, euro, sterling, and yen. Those 4, and trade the crosses between them. I have no interest in trading any other pairs, and I certainly have no interest in trading any of the minor currencies. They're just too volatile. What I like about FX is the lack of volatility. I don't want massive volatility coming in. I've picked on just the one, I suppose just to make my life easier. In time, I might expand it. I might look at maybe dollar yen, dollar sterling. I've got to consider the point that if I go dollar yen, dollar euro, dollar sterling, they're all back to dollar again. Does that have impact? If we've got a strong dollar, does it not impact all 3? Does it, is there too much correlation? In other words, I need to go and do that digging. For now, dollar euro, and I'll worry about the rest later. Ladies and gents, not seeing any more questions coming through. We will have the video up later this afternoon for download. And where are we? We're July, so we'll have a September and a November trading systems as well. In the trading space, the interleading months, we do the investing space. So we will be back. And so next month, I'm looking at income statements on the investing side, which is the August, and then September, and then November for trading, October and December for investing. Ladies and gents, we'll leave it there. Thanks very much for your time. Everyone, have a great day further. Cheers all.